All right, welcome everybody. How are we doing? It's Friday night, October the 4th. You're joining us on ForexNChill. Gigi will be here in just a moment. We have about 25 or so folks here. You can unmute yourselves. Go ahead and let me know where you're from.
What's up, Grant?
Eric, how you doing, sir?
Pretty good, pretty good.
Akeem here, Florida, calling in.
Hey, this is Sharna from St. Louis.
Welcome,
Susie
welcome.
from
McDonough, Georgia.
Susie from Milwaukee.
Earl from Florida.
Welcome, everybody. Welcome.
Hi, Stephanie Hoff from Santa Barbara, California.
All right. So we should be starting in just a couple of moments. As you know, tonight is ForexNChill. Tomorrow night, Gigi will be hosting for John Fibonacci, and we'll also be able to drop that link as well. So you'll have 2 nights in a row of some pretty awesome stuff.
Hey guys, what is going on? John Fib here. I want to let you know that Saturday I'll be doing a special stream hosted by ForexNChill's Guinevere Ramos, all right, the real ForexNChill. What I'm going to be doing is I'm going to release some products that I have bought in over the years off of Amazon or whatever. All right, I'm going to have some book recommendations. I'm going to have some office supplies recommendations. All right, a lot of the products that I felt have done me a lot of justice in my journey as a trader, as a developing trader and investor. All right, so you're not going to want to miss that. Yes, it's going to be recorded, it's going to be posted to YouTube, and it is free for everybody. All right, for every trader. It doesn't matter if you're in my company or if you're on my team or not, it is free for everybody. All right, so be there on Saturday, and I'll see you then.
Tonight we're going to do some basic stuff and then some more advanced stuff as well. We'll do some charting, we'll do some market structure, and we're also going to have some time for you all to mark up some charts. For anyone who wants to venture into that, you can volunteer and we'll help you through the process. We'll be starting in just a few moments, so hang on. All right, so for everyone who's on here, if you have the link and you want other people to join, please share it on your various social media outlets. You can go to Facebook, Twitter, Instagram, anywhere you want to, even Telegram.
What's up, everyone? It's Gigi. I need about 2 more minutes dropping the link to a few people who are still jumping on. Thank you for being here tonight. You know, we love you guys. We love hanging out with you on Friday night, looking over the market. So as Grant was saying, we're going to do something a little different tonight. We're going to briefly look at the charts, and then some of the people on our team who helped build ForexNChill to what it is over the last year, they're going to share their screens and mark up some charts. I know we got Grant on and Eric and Susie and different ones. Jamie cut the rope is going to be logging in from Saudi Arabia. So we just want to let you get familiar with us, familiar with our team, give everyone who wants a chance to share their screen and mark up a chart. And you can see that although we're all looking for the same point A to point B, that we might see the charts a little bit different, but we all had the same results which is profitable trading, which is what we hope for everyone here to achieve. So give us just about 2 more minutes and we will get started. And again, welcome. Share your link with all your friends and family that you think would want to jump on and hang out with us tonight, or people you know who might be interested in learning to trade, to give them an inside look at the Forex market. And then we're going to get started. Again, I'd like to thank everybody for jumping on. I'd like to thank my team for jumping on. We're going to have a fun time tonight. We're going to do things a little different. We're going to do it like we did a year ago when ForexNChill started, when all of us just jumped on and started sharing knowledge together, marking up charts together, critiquing each other, and helping each other learn. And that's how ultimately we all became successful traders, because every Friday night we would just jump on here, mark up charts together, study the market and how it worked, and eventually the hard work paid off. And the team has grown, the knowledge has grown, the skill set has grown. So whether you're a beginner trader, or whether you're here just to learn about Forex, or whether you're already doing a great job in the charts, just know that we are always students. One of my top mentors, he's been trading and teaching over 20 years, and he still studies the market on a daily basis. Once you fall in love with Forex, it's just like you never want to stop learning. You never want to stop looking at the charts. It's a very profitable skill set to have. I know I have people on here who just in this past year have gone from not knowing much about Forex to having consistent 3-figure days in the market, consistent 4-figure days in the market, people who have been able to pay off a lot of bills, people who've been able to quit their jobs. So, you know, you might be starting your journey in the Forex market right now, but just know that time goes by fast. With other skill sets, it might take you 3, 4, 5 years to be able to get to the point to where you can make money from what you're learning. But with Forex, if you just give it 30 minutes to an hour a day, you will be surprised at the growth that you can have in just a few months' time. I mean, we see people all the time and coming into Forex, and they're becoming 6-figure traders in under a year. I have a good friend. He's been trading consistently for 2 years, and he has a 7-figure account now. So there's just no limit. The only limits are the limits you place on yourself. So I'm going to stop sharing now and turn it over to Grant, and he's going to get us started.
All right, thank you, Gigi. Yep, we have a couple of surprises for you tonight. Just bear with me, my first time trying this out. All right, so we're working on a little promo or a little intro for these videos, so please bear with us. Tell us what you think.
Tonight, we're going to talk about basic market structure. I'm going to mark up a chart the way that I would mark it up for trading, and then I'll take some questions, and then I'll turn it over to some of the members on the team. So for those of you who know, market structure is basically looking at just what it is, the structure of the market. Whenever the market prints these candles, it's telling us what it's doing. It's like reading a sign language. So all of these candles and all these patterns are nothing but a sign language that the market is giving us, telling us what it has done in the past. And by looking at the structure or what it's telling us, it's going to tell us what it could possibly do in the future. So as market structure traders, we like to trade without a lot of indicators. We believe that our eyes are the greatest tools in the market. And why is that? Because these candles are printed by the market makers, by the banks and the hedge funds and the corporations that every day they exchange currency for currency to do big financial transactions. When I say big, I'm talking about multi-million and billion-dollar transactions like one of these candles was made by billions and billions of dollars that equal up to $6.6 trillion a day in the market. So what better way to learn to trade than to look at what the market is saying to you? Now, indicators, people use them for confluence or confirmations, and there's nothing wrong with that. But when you start marking up these charts, you want to have an unfiltered bias. You don't want to be thinking, well, my EMAs are crossing over, so it's going to buy, or my EMAs are crossing over, so it's going to sell. You want to look at this chart and by your own knowledge say, I'm looking for a sell if it does this, or I'm looking for a buy if it does that, or based on where it is right now, it typically reverses, or I'm looking for a correction. So those are the things you want to look for without any indicators on your chart. And you only need about 2 or 3 tools to do that. And that's the trend line, horizontal line, or horizontal ray. You don't need anything else, because looking at this, you can clearly see we already know we're in a downtrend, because when the market's going up, it's an uptrend. When the market's going down, it's a downtrend. And when it's going sideways, it's consolidating. And as Forex traders, we can do 2 things. We can buy and we can sell. So looking at this just on the highest time frame, which is the monthly, we can already tell it's in a sell. So I didn't need any indicator to tell me that, or any special magic potion. I can just look at this with my bare eyes, and I know that Euro USD has been in a sell ever since February 1st, 2018. And that's one of the basic rules of market structure, is just letting the chart tell you what it's doing. As market structure traders and as swing traders, especially, and day traders, we look at the 3 highest time frames: our monthly, our weekly, and our daily, because they give us our overall direction. And just looking at that again, it is very evident that the market is in a downtrend. Now, does the market move straight down in a line and never make any zigzags or flags or corrections? No. And that's where we start looking on lower time frames to see these corrective patterns. So it sells and it corrects. It sells and it corrects. It sells and it corrects over and over again. And so each time it corrects, we have an opportunity to get in and catch this sell. So if I were a swing trader and I wanted to catch this sell from the top and capitalize on this whole 540 pip move, I wouldn't just put in 1 trade and hold it. I could stack my trades all the way down. So now this 540 pips, I've got an opportunity to make about 1,500 pips trading this 1 pair if I'm going to catch just the sells and follow the trend. So that's why I only trade 1 or 2 pairs a week, sometimes 3, because I find a good move, a good pair that's in a trend. When you see something that is in a trend going straight down or straight up, you want to capitalize off that and ride it all the way to the bottom, or just like here, we could have ridden it all the way to the top. Now we know the market moves in 3 ways: impulse, correction, and continuation. These wave patterns happen on every time frame, from your monthly all the way down to your 1 minute. And if you were on with my good friend and trader last week, Terrell, he covered that really in depth. He showed you how to always know where you are in the market. If you missed that, that's a really good ForexNChill session. And we'll cover some more of that tonight. But just say, for instance, here on the monthly, where the chart was going up, on the daily and weekly and smaller time frames, I would have found corrections to the downside that I could have sold off and then continued getting in buy positions as it was going up. So let's just look at the monthly. We see a sell. Did it fall straight down? No. We see an impulse, a correction, continuation, a correction, continuation, correction, continuation, consolidation. Here it looked like we had got a reversal, but how do we know that this was not a true reversal? It didn't take out our previous high, and it just continued to the downside. Now we do have tools that we like to use. One of my favorite, and really the only tool I use, is the Fibonacci. And if we measure this, it came up to the golden ratio. what we know as the sweet spot of the Fibonacci. So it corrected up to 62% of the market, and then it continued on its downtrend. So simple tools like this is all you really need in the market to be a successful trader. And once we start getting on lower time frames, we can look at patterns. Or if you want to turn on EMAs, I can turn on a 9 and 50 EMA and a MACD. Now when I look at the trend of this market, my MACD is telling me every time I was under the MACD on a higher time frame, say for instance right here where it crossed over, look at my EMAs. My EMAs crossed over to the sell side, and it's consistently stayed in a downtrend ever since it crossed up there. We did have a few corrections here where it just vaguely went over the MACD, but using tools like these, if you do want to use an EMA and a MACD, again, 1,426 pips just by going with market structure. We know we are in a downtrend and we are following basic market structure, so all we want to do is sell. Now scalpers will come in here and catch some of these buys. And the thing about scalping, if you're scalping against the trend, you need to keep it to small amounts because it could reverse and go to the downside at any time. Here you got 440 pips out of a 1,400 pip move. See these small corrections here? You're going to get 100 pips or less. So that's why going against the trend, you should only be looking to scalp and not swing trade. You can swing trade or position trade or day trade going with the trend, but when you're going against the trend and catching these corrections, you want to know that that's going to be a short-term trade that you're putting in. So I'm going to mark this up from scratch, and I'm going to mark it up what we call naked, which means without any indicators, without any bias. And I'm going to focus on what we call our demand zones. If we're demanding something in a market, we are buyers. So if I'm demanding, I want to buy, and if I'm supplying, I want to sell. So I grabbed the wrong tool here. Give me 1 second. So when we see these huge areas where the market reverses to the upside, this is called a demand zone. Like here in this area, every time it reversed to the upside, that was a demand zone. We had buyers taking over. The first time it reversed up here, we had 2,500 pip move. Came in here again, 2,500 pip move. This time we had a smaller correction. It was an 1,800 pip move. Now you might think 1,800 pips is a correction. Yes, it is, because again, our overall downtrend is a downtrend and it has fallen 5,500 pips, and it looks like it's headed back that way again. And as opposed to demand zones, we have supply zones or sell zones. It's sold up here. It's sold here. It's sold here. So these are our sellers in the market. How do we identify these? Just imagine that you're driving from point A to point B, and you're getting obstacles on the way. You start out here. You get here, here's a roadblock. So you had to make a U-turn, come back. Get here, roadblock, U-turn and come back. U-turn, come back up here. U-turn, come back down here. U-turn, come back up here. So when we're going from point A to point B, we're focusing on these U-turns in the market. Now, with these new U-turns, if we have a lower high and a lower low, we know that we are in a downtrend. Every time that it goes lower here and lower here, we're in a downtrend. And so far, we've had lower lows and lower highs. Now, this candle right here is still forming. That's our monthly candle, and we're only 4 days into the month, so we don't know where this is going to end up. So if this closes higher and then starts going up, and we have higher highs and higher lows, that's going to take us into a reversal or into an uptrend. And again, you're going to see this type of movement on every single time frame. Before you start trading, you need to know where you are on the monthly, the weekly, and the daily. And the reason being, your weekly can be going in a downtrend, but your daily is going to come up here and go into an uptrend, and then continue down. Your daily will go into an uptrend and continue down, uptrend and continue down. And each one of these can present you an opportunity to buy against this downtrend. Now, when we have a downtrend, if I know that I'm going to get an opportunity for 200 or more pips, I will get a short-term buy against that, and vice versa. When you have an uptrend, there's going to be times where the market is going up, but it's going to correct down and you get a short-term sell. But the key point is knowing where you are on that higher time frame. Because if you're going against this higher time frame, it's going to be short-lived as soon as it comes into one of those supply or demand zones, or it meets support and resistance. All right. So let's mark this up. This is a lot of people's favorite pair, Euro USD. So we're going to look for this most recent swing low. This is the most recent swing low. Again, I'm not going to worry about this candle. It is still forming. This is my most recent swing high. I'm using what's called a vertical ray. I like to use that. I don't want it to be too predominant on my chart. I want to focus on the movement of the chart. Once I get my U-turns or my swing highs and swing lows on my monthly, I go down to my weekly and I do the same thing. Down here at the bottom, if your chart is skewed, just refresh it. Now, although on the monthly, I couldn't focus on this swing low, on the weekly I can. Why? Because this candle completed formation today when the market closed at 5 o'clock. So I can put a swing low here, and here's a swing high here where the market pulled down, made a U-turn, and came down again. And I will finish this off by doing the same thing on my daily. If you see right here on the daily, you have these candles poking out. Why is that? Because on the weekly, if you focus in on that, it took 5 candles to make this wick. Okay, going down, there's those 5 candles that made this wick. They were unable to hold this low and they started pulling back up. So if you ask me why I'm leaving this here, if you see, this created what's called like some equal highs and equal lows. And you see that candle closed where these wicks went down, and this candle right here came in where those wicks, and then it started pushing up. So I want to know that this was probably a liquidity run or a stop hunt or something that the market makers were doing. They knew everybody was selling. They knew everybody was looking to buy here. We bought here, so we come here and they're like, oh, somebody's already got a buy stop. So what do they want to do? They want to make a run on your buy stop, kick you out of the market, then just turn around and bring it back to the upside. And they did that by running down 47 pips, because the last time it was here, the market went up 180 pips. It went up right here, 156 pips, then it went up right here, 175 pips. It came here, it knew we were waiting to buy. It ran down just low enough to take out people's stop loss, because they know as retail traders, we're sitting here, we're putting our stop loss right below the most recent swing low. When we put in those buy orders, because we just knew that Euro USD was going to go up, we put our stop losses here, it came, took them out, and then it went up. So that's what you have to be careful about, and that's why I left those hanging out. It pushed it up 120 pips. Whenever you see a lot of equal highs and equal lows being created in one zone, there's trapped buyers and sellers, buy stops and sell stops in these areas, and they make these little runs to kick you out of the market. So I do leave that. I didn't mean to go in that long explanation, but just in case you're wondering why on my swing low, I left that, that's why. Now let's get our swing high on the daily. I'm going to bring it right up here to this area. And again, you see the exact same thing. Siri thinks I'm talking to him, but I guess I said something to make him think I'm talking to him. You see the same thing happened here. Every time the market pulled into this, it was selling off. So what did they do? They trapped sellers again by hitting their stop losses. People probably had sell limits because they knew every time the market was getting here and here that it was selling to the downside. So they came again and they did a run on those pending orders, 37 pips, just to turn around and drop the market all the way back down. So just be careful whenever you're making these zones that you make sure you get confirmations on your trades before you jump in the market. That's why we don't trade. We analyze off a higher time frame, but we are going to trade and make our entries off a lower time frame. So now that I'm looking at this, I can still see overall, some people will come in here and put in your trend lines, and there's nothing wrong with that because they want to focus on each time that they get rejection off that trend line. You see here it's pushing for that trend line again, and they want to see if they get rejection and take it further to the downside, or if it breaks and it's going to take them to the upside. One thing I like to do is I like to come down to a lower time frame and I start looking for those areas of equal highs and equal lows, or now that we're on a lower time frame, it's no longer supply and demand. These are support and resistance zones, okay? I'm gonna clean my chart up a little bit. And this might look like a lot, but I can tell you it takes me 30 seconds or less to get my bias of what I'm looking for in the chart. I'm just doing this slowly to explain things to you guys. Again here, look at all these wicks, all these equal highs and lows. When we looked at this chart on a higher time frame, these candles weren't here. So now do you see the pattern where it knows we're looking to sell? So it's trapping us in a buyer's market, then it's reversing on us. And because on this lower time frame, we got lower lows, but we don't have higher highs, my bias is that this could sell off one more time, okay? When you have lower lows and lower highs, you're still in a seller's market. Because it is sitting so close to a daily zone, I'm not interested in trading this pair, but I could see it. You don't have, our important candles are our engulfing candles. We don't have a good, strong, impulsive move to the upside yet. It's still under this daily trend line. And I see wicks to the upside, and I see when it got to this zone, because here's your bearish engulfing and your correction. So you got your impulse and your correction. If you want to put a Fibonacci on there and see how far it's pulled up, we can do that. From our wick to our bottom, and it's pulled up to the 50% level. So a Fibonacci, you draw it from your swing high to your swing low. And you see that gave us an impulse and a correction. So we could definitely see a continuation to the downside. When it gets here, you want to see if it's going to continue and continue those lower lows and lower highs. And if it does, then you just go back out on a higher time frame and start looking left at where is your next point of supply. Demand, because now we're going to look left at these areas right here where you could meet resistance again. And if it keeps on in the trend it's going, it's not moving aggressively, it could bring us all the way back down. But does anybody have any questions on what I did? I'm going to mark it up just real fast while you're asking your questions, just so you can see how fast I mark up a chart, because I do mark up 25 to 30 pair every week to include some indices, some cryptos, and I take the best trades, setups I see, or high probability trades. So any questions, you can go ahead while I mark this chart up again. Grant, if we have any questions in the chat, you can read them out.
So far, not anything yet.
Is everybody following that? Does this make sense to everybody? I didn't lose anybody on anything?
Ma'am, can you hear me?
Yes, I can hear you.
So you're marking up on the daily and the 4-hour and the 1 hour, correct?
I mark up my zones on my monthly, my weekly, and my daily. By looking at my monthly, weekly, and daily, I get my bias for my overall trend, and it's clear to see that I am in a downtrend still. So right now, I'm only focusing on sales. When I get to my 4-hour and my 1-hour, then I will start looking for these levels of support and resistance. Right there, you see the equal highs. Right here, you can see the equal highs. And these are like areas of support and resistance. And as you can see, there's also my corrections in the market. You can mark it with the trend line, or you can come here and do a rectangle to mark these areas. It's your preference. If you want to use colors, you can use colors. I took colors out of the chart because I don't want to have a bias. You know, some people still have the red and green candles, and it's just a psychological thing. When you see green, you think you're supposed to be buying, and when you see red, you think you're supposed to be selling. So by removing the colors, I'm colorblind to what the candles are doing, and I'm looking at basic price action. Does that answer your question about the time frames? Okay.
So, when am I looking to get in the market, on the 1 hour or the?
If you're looking to trade, like right here, I see like a head and shoulder that formed here. If you're looking to trade off of a 4-hour, you want to enter on a 1 hour, 30-minute or lower.
Okay.
I usually enter off my 15-minute charts. When I start looking for my entries, I'll go to my 15-minute. So just say I was looking at this sell. I have my definite impulse, because the way you can tell that you have an impulse, and I need to change the color of that. I just changed this today to play with it. I was doing something. When you have an impulsive move is just like a straight, sharp move up or down.
Right.
And when you see your corrective move, you see how your corrective move moves with a zigzag. I could have boxed my flag in and sold it from the top, or waited till the break and caught the rest of the downtrend. Does that make sense?
Yes, ma'am.
I know I'm looking for just sales. Let me take some of this stuff off the. All right, I know I'm looking for just sales when it comes up to meet my support and resistance area. So let's just say, let's mark this off. And the best way to become a profitable trader is to back test. All right, this happened September 12th. I can go down to my 15-minute. I can click here and go to, that was September 12th. Now I'll start looking at what happened to cause this sell. And of course, we're looking for that impulse and correction to the downside. We got a choppy reaction here, but we did start get some bearish engulfing, and it moved sideways. And then after, you could have boxed this off and caught this sell for the next impulse correction to the downside. And that's going by just on price action. And you'll see it did it again. Where did it pull it back to? You could have boxed in this flag here. And if you were still holding that sell when it broke out of your flag, you could have taken your profits. Another thing you could have done is if you're using an EMA and a MACD, you can see also here when it broke my trend line where I said I could have gotten in. You see I have a crossing of my EMAs. It broke my trend line, and it also, some confluence down here, it went below my MACD. So just say I had caught that little trade there. I could have caught 70 pips when it crossed back over and broke out of this. You see it pulled back to the upside again. So I would have got a quick scalp out of that. But what happened again? Had the same thing happen. It made a corrective move down. Box in your flag. When it broke your flag, your EMAs crossed over. But you see, they kept trying to trap people in this market. That's why it's best to wait and see something on a higher time frame if you're not scalping. Now, if you look and wait for these confluences on a higher time frame, you would have taken less opportunities getting in the market. Then finally, you would have gotten, here's one where it broke here, it broke here, And this one, it finally went up. But you could have caught impulse, correction, continuation. You'd have gotten kicked out of your trailing stop loss because you would have been in profit, of course. But this was another 87 pip move. I don't trade this pair a lot because it's right now it's been consolidating a lot and making small movements to the downside. If you look at it on a higher time frame, on the daily, you see we don't have any aggressive moves happening. It's just really choppy. Whereas if you look at a GBP pair, let's just try GBP USD. Look how much bigger these movements are. You can get 100 pips more out of a GBP USD move than you would out of Euro USD. Let's just measure this daily candle. This daily candle here was 177 pips. And if you look at Euro USD, these daily candles to the upside have been 36 pips, 50 pips. So right now it's just not moving aggressively. So I'm not trading it. So it's unless you're swing trading this, you're not going to get any big moves, and it's moving slow. So this is just really good for scalpers right now. So you just look at the pairs that are moving the way that fits your trading personality and determine if you want to trade that pair. Me, I'm not interested in this until I see a big reversal to the upside. But you got two of the world's most powerful currencies going against each other. Something would have to happen. One of them would have to tank, or one of them would have to shoot up to see a lot of movement in it right now. All right. So that's all I have. Go ahead.
What is the EMA that you use?
I like the 9 and 50 EMA and the MACD 4C. Those are the ones we've tested and used a lot. I have a friend uses the 10 EMA and I use the 9. But the 9 and 50 are the ones that work really well for me. And so those are the ones that seem to tie in really close with the MACD that we like to use. So does anybody else have a question before I let somebody else mark up some charts?
Hi, good night, Gigi.
Hi.
Alright, your EMA that changes color, right? I never got access to that, you know.
I just had to search it and copy and paste it from somebody who had it. It's something somebody wrote on TradingView, and you would just have to search it and encode it and program it into your TradingView. I think the whole HULL EMA changes colors. I think that's the name of it.
Okay, but you don't have the code fit.
It's too much to cover on here tonight. It's something I would have to do offline. You have to actually write a script.
Okay. All right.
So yeah, that would take a while. But if nobody else has any questions, we'll let somebody.
Question.
Go ahead.
I don't know if it's too much to cover the Fibonacci. I seen you had put it on the previous chart, and I mean, I'm new to it, so I was trying to see the significance in it.
Let me
whatnot.
change this to a basic. I want to change this to a default. There's mine. This is the basic Fibonacci. When you're looking at Fibonacci, it's just a retracement tool. And you measure it when you have an impulse. And I'm going to go over it real quick, and then I'll cover it later after some other people mark off charts. Whenever you have an impulse, you measure it from swing low to swing high if it's going up. And you just use it as a measuring tool. And it usually uses each level as support and resistance. But the three most important levels are 50, 38, and 61.8. And depending on how it reacts at these levels, you would look for your entry back to the upside. So this would be like your A, B, C, and D for those people who cover patterns. And with a sell, it would just be the opposite. If the market were selling off, you would measure the retracement. And you would start looking for your entries for continuation. This can be used on any time frame. From a sell, you go from swing high to swing low. And see, I've done Fibonacci so much. Look, I drew it exactly to a 61.8. That tells you I use it a lot. Because this is one of the most important most important measurements or levels that it pulls back to is the 61.8. So I'll draw it again. You're measuring. It's a measuring tool to measure how far something pulls back before it continues. And that's all it is. And each one of these levels, I'll draw it actually on a movement real quick. You go for those U-turns again, the swing high, low and the swing high. And if you look, it came down, bounced off this again, pulled into your 38, and then it continued to the downside.
Gigi,
Whenever you see it, say that again.
Sorry, we have a question when you're ready.
Oh, and just if you're wondering why this rejected and went down, because again, we are in an overall downtrend. So I just wanted to draw that on there to show you for measurement. What's the question?
Chelsea says, hey, Gigi, Lorenzo and I are together. He's curious what you use to keep of your daily PIP goal. Is there a form or an Excel sheet that you use, or what do you suggest as a best practice?
Yes, I do have the sheet that I've given it out here a few times. Grant, if you have access to it, you can drop it, or I can try and drop it when somebody else is charting up.
Okay.
But I know we got several team members on here. Who wants to chart up next? I heard, Eric, you did a great job on Chart and Chill last night. We got Grant on here, Susie, and a couple more. Who wants to go next?
I can go if you want me to. That's fine.
All right. I'm going to stop sharing and mute out.
So I want to play with gold tonight. I do a chart just a little bit different than Gigi does, but we all get to the same goal. That's the main focus. So on gold, I am looking for. I still look for my highs and lows on the time frame. So on the monthly, I'll go here and here. That's my high low. But I'll take on my monthly, I like to see what I'm doing overall on a chart. So I'll throw a trend line on the monthly. Then I'll take and throw a fib on the monthly also. So I'm gonna throw a fib on my monthly on where it stopped, and I'll take and throw a horizontal array on that.
Ooh, look at that 61.8.
And then I'll take on here as a mental note for me, because I'm trading this chart, so just to keep me where I know I'm at. For understanding, I'll say time frame, month, 0.618. So once I'm here and I understand this, once I pulled this on my initial kick, I knew I'm in a vital zone instantly, and I haven't even went any lower than the monthly time frame. So I know at this moment in time, I should be looking for a drop, because if I pull this again, you'll see that I hit to 382. We skipped the 5 altogether and went straight forward to 618. So now, as an understanding, I'll take this, since I know this my fib, I'll come here and change the color of it. Now, at this moment in time, I know what I'm looking for. I know I'm looking for a drop. And I know that I should get another move back up, because we're actually in an up move. So we're buying right now, but this is big enough that we can look for sales back down to the trend line at 1,780 pips. Then all I'm going to do is now I will start coming down to the weekly. Every time you switch time frame, do a chart reset. Now I know that I'm on the weekly, right? So I'll come here, I'll throw another fib, because I had to move up. I'll come here, I'll put a one here. So it's going to take me, it takes me a little bit longer to draw up my charts than Guinevere. Then I'll change this color to something, because I know it's good. I don't want to get it confused with.
Just so y'all know, Eric
monthly.
be killing gold.
I love gold. You don't have to do this, but it's just something that I do. 618. So I've made it no lower. I've made it no lower than the actual weekly right now. But I know that I should get this move here, because we've been looking for a while for our monthly pullback and we hadn't got it. So that's 1,969 pips I should get between where my 618 is on the monthly and my 618 is on the weekly. But now I can also pop a trend line. Here. Now I can go to the daily, and I can set, I can pull another fib from here, because this is my last impulse, and I can say, at this moment I can say, well, should at least get this, or I can just let it ride back down, because right now I switched over to a down move. So we're selling now in the market. My whole goal right now is to sell this. So now I can go ahead and drop down to the 4 hour, and I'll come in on my chart, and you probably saw it before I cleaned it up. I'll come in and give indications of what I'm looking for. I already had one there. I put it down when I hit down here. So when I hit this point here on my channel, I'm looking to sell. So now I'm gonna work this channel, because this channel is big enough for me to work 574 pips is big enough for me to work it up and down. So I can work down, up, down, up. The most important ones are where I'm going to put my most on it is my up moves. I'll trade with less on my down moves. Because we know that this is an uptrend, so I'm looking for this. I'm looking for an up move.
Hey, Eric, I think the first time you had a 4-figure day was trading gold like this. And
Yes.
then yeah, I remember you had a big week that week. He had gold in the channel like this, and he had a really good week. Susie's on here. She had her, I think, her first 4-figure day trading gold this week. We're all on the same team, so these guys are killing it with gold.
So now we can work down to the actual 1 hour. And we can start working this channel. So I'm looking on the channel on the 1 hour. I'm just looking for a break. I'm looking for a break in my trend line and come down. So what I do, I drop to the 15-minute, and that's all I'm looking for. And I'll pull fibs on these lower levels on the hour to catch these moves to where they should come back to on each one of these. All we're going to do is work this all the way down. This is where we're looking to come to, is to this trend line. And that's what I'm looking for. Is that it, to me, it makes it simpler for me to keep a clear head on what direction I'm going. I know I'm in all buys all together, but I know I can take this sell. If I took this, if I got in here, I can put a standard here. Then right here, I'm gonna put a 0.75. When it hits here, I'm gonna put a 0.50. When it comes back here, I'm gonna put a 0.35. Here, I'm gonna put a 0.25, 0.20, 0.15 until it hits down here, and I'll stop when I get in this area. But all these are running. I'll never sell this one off, but this one will be my sell-off pair, and I'll sell off chunks of them as they work their way down to the trend line. So I'll make money off all of these. But if this first one makes its way to the bottom, all the way to the bottom, I've probably made around where we're actually looking probably for it to come down here. To this trend line is where I'm probably looking for it to come to. But this is my 618 from this push up here. So I'm looking for it actually probably to come back down this trend line. If I can get it down to here, I think on the higher time frame we were up to like 1500 pips. And so it says 240, but well, earlier it was 1500. So we're looking, or this was 1500 here. This here was the 1500 here. So if I'm looking for that on the standard, it's $15,000 on the first entry, and I never had to put nothing else in all the way down. Anybody have any questions? That's it, Gigi.
Hey, go back to your daily real quick.
I'm on my daily.
Eric, we got one question from Robin. She asked, are you currently in this trade?
No, I didn't trade this one this week. I was messing around with UChef and UCAD this week, so I was not in this trade. I caught the trade. Last time I caught this the down move was here. It's February the 20th or 21st, all the way down to the bottom. It was 700 pips. And that is February the 19th, 20th. Yes, that's the last time I caught it. And I caught it, and I worked my way down that trade. But no, I didn't catch that one. I'm waiting for it to get back up here, and then I'm going to start selling it down. I'll put an entry right here. That's the reason I had it already marked up, because I was waiting for it to get back there for me to get into it. Because I missed the initial move. I missed this move. What is that the only question?
Grant said you're the stacking goat.
Yes, I love stacking. What you got? What were you asking about the daily?
It might have been the week. Go back to your weekly real quick. I just want everybody to see something. Yeah, y'all. Eric kills gold. He makes. You see how we were talking about after each impulse, you got to have a correction. You can see on your weekly. That's how we were talking about knowing where you are in the market, and that's how he knows. This is due for a sell-off because you had that big, huge impulsive move to the upside on his weekly. Can you refresh it just a little bit?
Oh, sorry.
So it only makes sense for it to sell off and correct some now because
you've
only had one good correction. Yeah.
And that was not even a real correction. Yeah. That was a 3, if I remember, it's a 3. Yeah. See, it wasn't even
until it breaks that 50. Yeah, that 50 fib gets between that 50 and that 78.
It wasn't even worth even that was a good trade, but it wasn't what we were looking for. We're still looking for the daily.
Yeah, it's still a good uptrend. Yeah. Throw a fib on that. You see that impulse from the bottom that had a really good correction, like in the middle. See how far that one pulled down.
Right here.
No, go to the middle of your chart, like the past. Yeah, go down all the way down to the bottom. That's
okay. There.
Yeah. See what it did on that fib. Maybe we'll get another good correction like that.
Yeah, it was
it came down to that 78. See, that's what we like to see right there.
Yeah.
Yep. John Phibb is on, guys. The gentleman from the video at the beginning that's going to be having the session tomorrow night, and he loves the fib. So that 78 is a really good pullback spot.
Yeah. So hopefully, I would love to get that. But if not, then we'll work our way back up and look for a bigger one. Because the higher it gets, the more it's going to exhaust. It needs to come down for this sooner or later.
So how did you fall in love with gold, Eric? Because you traded all the time.
That move there, that one move there got me addicted to it. That day, I was having lunch with my boss. And I was on my phone looking, and I saw it. My alerts went off, and I pulled it up. I looked at it real quick. I put a trade in, sit down for lunch, 45 minutes, and made like $700 some in 45 minutes while I ate lunch. So that was it. I was hooked from that day.
That's a good reason to fall in love with gold.
Yeah.
When it can pay you more on lunch than you probably making at work.
Yeah, for that day, yes.
So if y'all ever have any questions about gold, Eric really studies gold and the way that it moves, and he does a great job with it. So y'all be on the lookout. If you want to drop your chart, y'all want him to drop the chart so you guys will have it for next week in the chat?
Yes, that'd be nice.
Yes.
Go, Eric. So I know we got a couple more people from the team on. Does anybody else want to mark up a chart? You see, guys, we all had the same analysis, but because everybody processes information different, he marks up his charts different, but I guarantee you we're both looking for the same thing at the end of the day. He's very meticulous with his charts. He breaks it all the way down because he wants to stack. He does a lot more stacking than I do. All right, Susie, you want to go? Susie was one of my private students, and she's now on the team. She is killing the market. She's making more trading now than she was making working. And I'm only posting this because she already put it on my Facebook, so I'm not telling her business. But Susie, you want to share your screen and mark up a chart? Tell everybody a little bit about yourself. You're probably muted. You can unmute yourself.
Sure, Gigi.
Thank you, ma'am.
I want to show a couple of pictures that I of the trend-based fib extension. Let me, you can turn it over. I posted them and it's very interesting.
Just click on share at the bottom of your screen, the folder at the bottom that says share. Make sure you don't have anything crazy up you don't want us to see.
Oh, yeah. I'm not seeing it.
Because we are live. I'm messing with you. If you hover your mouse.
Oh, there we go. Okay, I got it. I had it minimized. So here we go. I'm going to show you some of the images that I did. Let me get here and find them one moment. My screenshots. You can see I take a lot of screenshots. I tend to do a lot of back testing like Gigi was talking about. But let me see if I can pull any up and just go over them with you. Like I said, I take a lot of screenshots. And I want to find the right ones. So just bear with me one moment. I apologize. Let me get to this over here. You guys know my secrets now. I'm a screenshot queen. But that's how you learn. You review people's work and you stick with it until you can do it yourself.
Well, it's definitely paying off.
Well, it certainly has. I've been at this for a year and a half now, and I will tell you, I absolutely threw myself into it. There's no half measures. And here is an image of EUR-GBP, and I had used the fib extension. Let me get another one. Here we go. Where if it makes a prediction for you, it's over on TradingView, this second frame down. There's all your fibs, and typically what we use, and I'll do a live demonstration here in a minute, is a lot of us use the standard fib retracement tool. But I watched a video that gave us a lot of instructions on the Fibonacci. And the only way to learn is get in here and draw it and see how it plays out. And while I was playing with it, it was pretty amazing. Let me see. Oh, look. Hi, Eric. You notice I watched the other night. Oh, and these are the ones I took tonight, so I must be further back. I apologize. I was not prepared to do this, Gigi.
That's okay. You can share your screen and mark up a chart and show us.
Yeah. Well, I have some that are just so remarkable. Oh, here we go. Here's one I drew up using the tool, and you can see it was just absolutely blew my mind, and I did a series of them. Pick one, okay? You'll notice I went from the low to the next high here, down to the low, and it told me where it was going to go. Okay, imagine this isn't here. It's not here yet. But by drawing this, it showed me where it was going to go, and I'll be darned. Not only did it pass the top target, it went on above. But it landed at the 1.618, which would be the next target. Would you agree that's a wow?
Yes, and I think a couple weeks ago we covered the Fibonacci and which extensions go where, and I think it's if it hits the 3850 or 618, it pulls up to the 1618. I'll have to remember because we had color code them at one time. You can color code the different levels on your fib so you know where it rejects, where it's going to extend to, because there's certain levels where it rejects that will tell you where your extension is going to be. I'll have to look that up again. Maybe I can.
Yeah, I've just been playing with it, and I'm so excited because this was drawn on the 1 minute, on the 1 minute. And then I went on, it was drawn on the 1 minute, but this is the 15 minute, and you can see how it played out on the 15 minute. And then I progressed on to the 1 hour. Now this is still the same drawing. The same drawing, but the different time frames. And you can see from the high to the low to the next point, and I would anticipate a reversal. Now, I will also tell you that this, and Eric can attest to this, is we got hit by a market maker handle, but it didn't. And here it is on the 4 hour chart. And that was drawn on the 1 hour. You can see it consistently, and everyone I know, what was interesting is then some of the master traders came in and did their charting, and it all agreed. And so every time you have wins like this, and it just builds your confidence. And so I'm going to continue playing with this particular, and here it is on the 4 hour. You can see how it just plays out. You just have to learn, you know, where to place it. But it's a 3-point move.
Yeah, it's been a while since I used this one.
Low, and then back here, and it told me exactly where it was going to go. I mean, it went down to the 618 or the 62, whichever one you use. And so now I can do it from here to here to here and predict where the moves are going to go. If that doesn't get your attention, I don't know what you're doing. But let's go to a live chart and I'll show you how I do it.
Gigi, can I ask you a question?
Sure.
Did you start using that tool because it was difficult for you to find placement for the fib on the chart, and it helped you to see it visually?
No, I had watched a video and I just thought it was interesting. I do use the standard retracement fib. We all do because it's so consistent. But I have a natural curiosity, and the best way to test things, number one, test on your demo, not on your live account, and just see how these things play out. Because if it adds to your confidence, if it proves itself to be consistent, why not add it to your arsenal?
Thank you.
You're welcome.
Hey, was the video on that course we got from Udemy?
Yes.
Okay, that's what I thought. That's why so many people on the team do very well with the fibs, because it's one thing we used to teach a lot of in the group. We haven't covered it lately. We'll have to revisit it.
Well, I'm going to go back to gold, and you can see I have Gigi's 950 in the MACD. But let's go to a naked chart. Oh. And you can do it on any time frame, but let's do something. Okay, it's over here. This is your line tool. The second one down has all your fibs. And you can see there's so many, and yet you'll see which one is favorite here, the fib retracement. That's the one that we all use. The next one down is the trend-based fib extension. And we're just going to play here from this low to this high. Let's go to this low. Okay. Where did it retrace to? The 38. But now if I want to bring this down, since we know what this is, this tells us, this is at a zone. Now I'm on the 4-hour, and here is Eric's trend. So let's see how this plays out. Okay. Now for some reason mine looks a little different than his, and the different brokers will be that way.
Plus, he uses Fibonacci, and you're
I was using Fibonacci candles.
Okay. It was like, why does mine look so different? There you go. Okay. Now, by drawing this, this says that it's going to come back up. Here's the 38. Each one of these levels is a potential target. Now, when this comes up, we can redraw it again, and it'll tell us. But let's go back here and just do some experimentation, or let me find another pair. And it'll work on any pair, on any time frame. Something like this. Well, let's go down to like the hour. I want to see something that, how did it play out? Go from the high to the low to this zone here. Now, knowing market structure, this can come back to the top, but the anticipation is that because of this configuration, it's going to come down and follow this order. Does that make sense? It is very likely, as we can see, now we're in a trend. And guys, I'm just now, I told Gigi I'm experimenting with this, but I have seen it play out so many times that I just find it absolutely fascinating.
Excuse me, Susie.
Yes.
I was wondering if you wanted to enlarge your screen, you can go to the top right and click, click that. There you go.
Oh, I'm sorry. Yeah, thank you for that. Oh, let's see. How did that play out? Pretty well. And you can just do it over. Here we start at this high, come to the low. Look where it went. All the way. I mean, that's beautiful. And then it comes down exactly, I mean, right here, back. Just like it said it was going to do. So my advice is just get in there. If you see something that's interesting, the best way to do it, get on your demo and back test. Back test, back test, back test. And I could go in here and, you know, replay it and all that, but it's so fascinating to me. So I hope you guys understand where to get that. Okay, I drew this. This came down between the 50 and the 618, but it does give you the levels to watch for, and then you just start all over again. Does that make sense?
Yes, ma'am. I haven't used this in a while. I'll have to test it out again, but I knew that it was extremely accurate, and but
it's fascinating.
There's so many tools out there to use. Sometimes they just slip your mind.
Well, but you saw my pictures, so I mean that's how I operate. I do this back testing and hopefully come across something that makes a difference in my trading, and I believe that this will.
Yeah, and that's what I tell everybody. We have so many people having 3 and 4 figure days and weeks, and everybody does something a little different. You have to trade what you can see in the market, because we're all going to view it different ways. And when you find what works for you, if you're able to make money and make withdrawals, and you need to perfect it before you move on to something else. That way you won't be confusing yourself. So she's found what's working for her. She's got to the point where she can make withdrawals and have profitable days. So now she's experimenting with some other things because she's consistent in what she already knows. So become consistent before you start mixing around with something else. It's good to always be a student. It's good to always learn. But before you start jumping from strategy to strategy or whatever, find something that you can make work for you before you give up on it and give up on yourself, because we all have those aha moments and what clicks for us. And that's one thing I like about IML. That's also now IM Mastery Academy. We have so many instructors and educators teaching different things that everybody can find something that works for them. Thank you so much, Susie, and congrats on all your success. Keep killing it and keep learning. And Jamie, cut the rope.
so much.
Are you still on from Saudi Arabia? We're going to let 1 or 2 more people mark up a chart, and then what we want to do is, there's anybody here that has trouble marking up charts and you want to share your screen and get some assistance from the team. We used to do that, help people out as much as we can. So Jamie, are you here? He might be, I know it's mid-morning over there in Saudi Arabia. He might have fallen asleep on us. So he's not answering. Grant, do you want to go, or do you want to see if somebody in the audience wants to go and mark up a chart? John Phibb, you want to share something if you're still on? Always good to have an expert on the call.
I'm actually on my phone at the moment. I'll let somebody go next, and I might do 1 or 2 things, but I'm gonna let somebody go first because I'm in the middle of something at the moment.
Gotcha.
Well.
Sure, I'll be happy to go.
All right, thank you.
Go for it.
All right, can everyone see my screen? We good?
Yep.
All right, so this is Great British Pound, Australian dollar, and I'm on the monthly. So Eric did a great job and Susie did a great job marking up. So I'll just do a basic, and I'll go into some best practices also. Some basic things that sometimes we might overlook. All right, so for example, all right, this is our monthly. So we start on the 3 most important time frames, which is monthly, monthly, weekly, and daily. All right, if you want to write that down, if you're not familiar with it, it's really important that you know about it, because those are the time frames that will give you a bigger view of how the market looks and where it's going. So I'm going to use horizontal ray. This is a little bit of an anomaly here, but I'll use it. All right. Then I'll go down to the weekly. And also Gigi did a great job too. And I'll do the reset just like Eric was talking about. Use my trendline tool. All right, now on the weekly, we can see, let me shrink this down a little bit for you, that we're in a downtrend. This would be your impulse. This would be your correction. And then we're expecting a continuation at some point to go down. But on the weekly level, we can't afford to wait for this to go all the way up. Maybe to here, that could be a few weeks to a few months before it decides to come down. So then we change to the daily. It gives us another good view. Okay, so now we can see that we have the impulse here, and it's correcting this way, and then we can expect to move down sometime soon, I think. So let's see what's going on. Oops. Okay, now move down to the 4-hour. All right, this is where it really starts getting interesting. All right, so we can see the price has moved down, corrected, and is moving down again. It looks like it may correct again and do something like this. And we're expecting it to come to this part of the trend line. What we want to do is watch price there. But if it breaks through, we want a strong move down through structure, then a correction, and then continuation. Now, there's no guarantee that it's going to work like this, but let's see. I know Susie was talking about the fibs. Let's see what it says. Okay, so I guess I've been drawing these too for a while. Came up to my 61.8 or 62. That's what I'm looking for. That would be really, really sweet if it did, but it doesn't always listen to the things that we want. And then a move down would be really nice. Let's see how many pips that would be. It started here, came all the way down here. 500 pips is pretty nice in a span of 9 days. That's worth waiting for. And like Eric does, you can always stack on the way down. You can increase your pippage from 500 to who knows how many, maybe 700, 800. All right, what I want to do now, when it comes to the 4-hour time frame, Stevenson Lindor is my mentor, one of my mentors, and he's a mentor to a lot of the other traders on our team. He says to jump down a couple of time frames. So if you're going to analyze on the 4-hour, for example, you're going to want to jump down to the 1 hour, 30-minute, possibly the 15-minute to look for an entry. So let me do that. Let me go down to the 1 hour and see if there's anything that looks good. Not quite yet. As you can see, it's starting its move. Now, this is an area of resistance, so it might hesitate here and continue up, but we'll see. This is the 50 fib. That's always a good place to go. Wherever it does go, you want to keep an eye on it to see if it breaks. And that's when you want to start thinking about getting in. So let me go down to the 30-minute. All right, now it's starting to break a little here, but it might come down. Let's say if we were to draw a trend line, right? Or draw a trend line on this, it would be kind of similar, right? Now, if we were to do that, and it breaks down this way, and then corrects, and then continues, that's a pretty strong bearish move. If it does something like that, then we wait for the impulse to finish, wait for the correction, and then look to get in on the correction. Okay? All right. That's it for me as far as the markups. What I want to talk about a little bit more is some other things that are pretty important. One of them is protecting your money. As investors, we're here to make money, but that's not the primary goal. Our primary goal is to protect our equity. So let's say you open up an account, whether it's live or whether it's demo. The first thing you want to say is, if you open a demo for 2,000, 5,000, or even 100,000. You don't want to lose a lot of money, experimenting. You want to practice the good practices that have been taught to us. And one of those is to protect your equity. How do we do that? Well, one of the best ways to do it is to use a stop loss. Okay, so stop loss, or SL for short, is really important. Let me try to increase the size of these. Hold on. That's probably better. There we go. All right, stop losses will keep you sane and will protect your money. For example, let's say you're looking at the trade that we were just looking at for GBP odd, right? If you were to enter a trade and it did not go your way, how long would you be willing to let it go the other way before you finally called it quits? Some of us don't know. Some of us say, well, I have to let it breathe. What you want to do is you want to make up your mind according to your rules, or the rules that you've learned, and you want to set a stop loss and be pretty firm with it. You don't want to set it too big, because then it could hurt your equity. But you don't want to set it too low unless you really, really know what you're doing. A good rule of thumb is to set a stop loss equivalent to 1 to 3% of your account size. Now, if you do 1%, that means you're more conservative. If you do 3%, that means you're taking a little bit of a bigger risk. You don't mind. But try to stay between 1 and 3%, or an average of 2%. So, for example, if you have an account for $2,000 times 2%, which is the same as 0.02, that would equal $40, okay? So that means you set a 2% stop loss, which is equivalent to $40. Now, you can, depending on how many pips you want to set your stop loss for, that will determine your entry, or your size for your entry. So let's say you wanted to do stop loss. Let's say you wanted to do a stop loss of, say, 20 pips, right? How do we determine what that's going to be, right? Well, 20 pips has to be $40, right? $40. Now, that means $2 a pip. Okay, so you may be saying to yourself, well, I've never really set a stop loss. How do you determine what's $2 a pip? As a general rule, a micro lot, which is 0.01 of a lot, is worth approximately 10 cents per pip. Some pairs are going to be 12 or 13. Some are going to be 6 or 7. Gold is 10 cents a pip, for example. So if we know that a micro lot is 10 cents a pip, and we're willing to risk $2 a pip, then we know right? 20 times a micro lot equals 20-cent lot, right? This way, your 20 pips times 20-cent lot. Oh, and I'll explain that again. Hold on, let's see. Okay, so 20-cent lot times 10 cents equals $2 per pip. Okay. Once you get used to this, you can do it in your head. All right, so now that you've set your stop loss, what you want to do internally is tell yourself that you're willing to lose it. In fact, the trade may already have been lost. So you mentally prepare yourself, because otherwise, if you're not mentally prepared for a loss, it could sting a little bit. And over time, you don't want that to add up. You want to build up a resistance to that. All right, so we use the stop loss as one way to protect our equity. Then you want to make money or increase your account / investment. That's the second thing. All right, we do that by entering trades and by winning trades. You don't have to win all of your trades or even a majority of your trades to make good money in Forex. In fact, many traders only make about half of their trades, sometimes less than half. But that's not bad, because what we're trying to do is we're trying to set a particular rate, return on investment, or ROI. Okay, so if we're going to set a 20 pip stop loss, our goal is not necessarily to get 20 pips, because that would be a one-to-one return on investment. When it comes to our group, our regular minimum return on investment that we're looking for is about 3-to-1 or 1-to-3. That means for every pip in a stop loss, we're looking to get at least 3 pips in a win. So sorry about my keyboard if it's too loud. It's kind of a classic. Kind of like the way it works. Okay. And I guess. Now, sometimes you're going to risk 20 pips and not just get 60 pips. You might get 100 pips. On a win, you might get 200. That's why we're looking for at least 3-to-1. And that helps with protecting our equity. So, for example, if we take 10 trades and we only win 5, that means we've lost 5. And if we set a 20 pip stop loss and we're looking for 60 pips, and we've won 5, lost 5, we've lost 5 times 20 pips, which is 100 pips. However, we've won 5 times 60 pips on average, which would be 300 pips. So even though we've lost 100, we've won 300. So our net is a positive 200 pips. And that's how you can win in Forex. Now, the last important thing that you want to keep in mind is your mindset. Mindset's really, really important. Not only do you want to be focused when you're practicing or trading, you want to also have the right mindset. You want to be relaxed. You want to be in an environment that is that's peaceful for you. You don't want a lot of stress. There's a couple of books, and actually there's more than a couple. There's a lot of books out there that will help. One of the most popular ones that does work is called Trading in the Zone. I think it's by Mark Douglas. Now, Trading in the Zone is a really good book. Sorry?
That is by Mark Douglas.
Okay, yeah. And it's a really good book. It'll help you get your mindset straight and at least have a set of guidelines that you can create for yourself on what to do to make that setting peaceful. Because the last thing you want to do is trade when you're in a bad mood. That's the worst time to trade. You definitely want to count to 10, and if you have your phone open on MT4, you want to close it. But it teaches you a lot of other things. Now you can buy a hard copy on Amazon. You can get a PDF online if you just Google it. But also there is an audio book on YouTube. So if you go to YouTube and type that in for the search, you'll find a few versions of it, and you can listen to it. So this is just some basic stuff that I wanted to make sure everyone knew, especially the newer traders. I know we've covered a lot tonight. Did anyone have any questions?
Yeah, I have one question.
Sure.
Okay, when you open up an account and they have these different ratios like 1 to 20, 1 to 50, 1 to 100, 1 to 200, what would be a safe one to use as far as the whole ratio deal? What would be a decent one to use?
That's a good question.
As a beginner.
That's a real good question. When it comes to brokers, depending on the country where the broker is, you're going to find different levels of leverage. And that's what Richard was talking about. 1 to 20 is now, I think, the new European max if you happen to live in Europe and you have a European broker. American max is 1 to 50, Japanese 1 to 25, but not a lot of people here have a broker in Japan. For American traders going overseas, you can get some brokers where they'll give you 1 to 100, 1 to 200, 1 to 500, sometimes even 1 to 1,000. I would suggest, as a new trader, and I really haven't changed it, I would suggest 1 to 200, and if you want to, 1 to 500 max, because the higher the leverage, the more you can win per pip. However, the more you can lose too. I recommend the 1 to 200 just because if you get good, there's no need to increase your leverage, just increase your lot size. That would be my recommendation.
All right, thank you.
You're welcome.
I agree. I tell new traders not to go over 200 either, because especially until you learn to take losses, because you'll get greedy or you'll be afraid to close out a losing trade, and it will eventually just blow your account if you don't close the trade and you keep letting it run. Like I had one trader who increased their account by 400% in a week off of like 5 winning trades. And they allowed one trade to take that whole account back because they over leveraged and they didn't want to take the loss, and they let it go from almost $1,000 back down to 0. So you don't want to get too greedy. And the brokers, remember, they make money when you lose money. So they're giving you enough rope to hang yourself. Don't take the rope. Don't take the bonuses. Don't take the high leverage. Just the high margins. Just stay 200 or below.
Gigi's exactly right. Thank you for that. One of the things that a lot of brokers do to incentivize you to join them versus another broker is to offer a bonus which matches your deposit. You want to avoid that because in the fine print, what they don't really tell you is that it can impact your margin. And if you have a trade based on, let's say you have a $1,000 account and they do an equity match of another 1,000. What they're really telling you is that if you over leverage based on the 2,000, they'll take your whole account and your account will disappear real quick. And it's terrible. It's sort of, it's not cheating, but it's not exactly telling you the downside to that. Some people can win with it, but I highly recommend against it. There are some brokers that you may find with your team or on our team. If you want to ask some of the people, if you join the team, what brokers they're using, they'll be happy to tell you. It's various. We don't recommend one or the other. It's just that, like, for everybody, different brokers work better for different people. We all trade similar style, but like any sports team, for example, if you have a basketball team or a baseball team, everyone is playing with the same rules. They've practiced many, many thousands of hours, but they still have a slightly different style. Some people may seem to be a little better, or they might be better at certain parts of it, but they all have a good knowledge of what they're doing. It's the same with Forex. Does anybody else have any other questions? Does anybody want to mark up? We're here to help.
Yeah, we got John Phibb ready.
All right.
He's going to share some of his knowledge. Guys, this young man, he's only 25. He's been studying very hard for 5 years. And it really shows. Remember at the beginning, I told you, if you just put a few months of consistency, you'll start seeing results. Well, he's put 5 years of consistency, and he has really good results from it. He's educating on IM Academy now, and he's with Trade House, and he's the gentleman that will be hosting tomorrow night, giving us the Christmas wish list. So John Phibb, take it over.
I appreciate it. Thank you so much. And thanks for the 81 people who are still on. I'm not going to talk about myself too much, but she pretty much covered it. Yes, I've been doing this for 5.5 years. The opportunity cost to get where I'm at today was very high. All right. I lost a lot of friends, relationships, stuff like that, but it was all worth it to me, but it may not be the same for everybody. All right. But anyways, so tomorrow, yes, I will be doing another Christmas wish list. I did one last year, but I was not in IM last year. I was still an independent trader back then. But some of the people that, I used to have students back then, and some of them paid attention to it and got a lot of value out of it. So I'm doing it again this year. But now I get to impact a whole lot more people. So it's going to be awesome. And it's really interesting. The gentleman, I forgot your name, I'm sorry, but the gentleman who just was presenting talked about Mark Douglas. And I'm actually going to go over some of the book recommendations tomorrow. That's part of it. You guys already saw, I guess, the video that I put out, the book recommendations, the office supplies, and things like that. But yes, I'm going to go a lot more in depth over that tomorrow, and it's going to be a good time. All right. I will do a little bit of this, and then I got to go. I still got some homework due by midnight, and I haven't started on it yet because I'd much rather be here with you guys. All right. So it's cool. But anyways, so the gentleman that was just on had some very, very good points, and I agree 100%. I'm going to check the chat here in a second, so just bear with me. Especially with the stop loss, right? And the risk management rules and everything, spot on. Okay. So that's going to take me to my next point. Everybody in the world can open up a currency chart, right? They have, you can just Google currency charts. They have, free access, whatever. So everyone in the world has access to the same chart. Now, the feeds are a little bit different by a couple of pips, whatever, the data providers. All right. But generally, everyone can see the same chart. Okay. So now what I want you to do is try and shift your perspective. Okay. So what I mean by that is everyone on this call is a retail trader at the end of the day. None of us in here are big enough to report to the federal government. Unless you are, then that's great. But I can almost guarantee you none of us are. Okay. So now imagine for a second that you are that big entity, right? Say, you get a call from somebody on Wall Street. They say, hey, we want you to come work for us, yada, yada, yada. We're going to give you X amount, billions of dollars to mess around with. Okay. So now from the perspective of somebody or something that you can now control the market. You can shift price 10, 15, 20, 30, 40 pips. You can do that. So from that perspective, where would you push price? Would you push it higher? Would you push it lower? Would you keep it in a consolidation? What would you do if you could control price? Okay. So if I were to control price, if I was able to push it, like I said, 20, 30, 40, 50 pips, there are specific areas that I would push price to. Now, where would that be? That would be in an area that I would assume that traders have their stop loss, right? Just like he was saying, you know, protective stop to either protect your gains or to prevent further downside on your account, whatever the case is. Okay, so let's just say John is the one controlling the market, right? I am going to switch my perspective to the retail trader and assume that the majority of the traders in the world are retail traders, and I know retail patterns. So let me show you an example. So let's just look at this chart. It's a 5-minute chart, which is small time frame. I know a lot of people like 5-minute, 15-minute charts and whatever. So we had AUD news this week, all right, which was cash rate news on Monday, about 30 minutes before midnight Central Time, okay? So what I want you to look at this chart for a second, and from a retail perspective, it looks as if it's a downtrend, right? We could all agree. Now, how do we come to that conclusion? It's very easy. High, lower high, lower high, lower high. That's obvious, right? Excuse me. We have a low, a lower low, a lower low, and a lower low. So this right here is a classic downtrend, right? Even if we drew some trend lines, right? We drew a little channel, something like that, which you won't ever see me do. But again, from the retail perspective, right? So for anybody who got long in anywhere in here, it doesn't matter. What are they going to look to the left that they might place their stop at, right? It could be a high, or it could be this high, right? Or whatever the case is. Now, when I teach on stream, on Zoom calls, on ForexNChill, whatever the case is, I like to put out the fact that news is simply an injection of liquidity and nothing more. That's my personal opinion. Okay. Now, with that being said, back to this scenario, we have news for AUD, Aussie, right? We have news coming up. Okay. So now, just like I said, right? If for everyone who is long in here, they're riding the downtrend. Okay. They're going to have their stops above this high or above this high, whatever the case is. Okay. So now, let me just do a visual. Let me just draw a line. Okay. They might place their stop at the high. Let's just assume that's a stop loss, right? This is a pretty distinctive high, I would say. It's fairly obvious. So we can say that maybe, you know, we went short and we placed a stop above here. Okay. So now watch what happens as price goes forward and as the news hits the market, and my perspective that news is just an injection of liquidity. Okay. The ones who control the market, right? I, as somebody who is controlling the market, again, from the perspective of somebody who controls the market, if I'm controlling the market, I want to take everybody out. So I would want the market to take out the stops that are resting here and that are resting here. And if I can get it high enough here and here. Okay. So now, hopefully some of you are anxious enough. You want to see what happens next if you haven't already seen it. So let's see what happens next. Okay. I got to warp it a little bit just to see it. That's how much it whipsawed. So again, this is a 5-minute time frame. Okay. So from the perspective of the 5-minute chart, right at 11:30 Central Time, which would be 12:30 on the East Coast. Okay. Within 5 minutes, price ran higher. Now, why did it do that? Because just like I told you, there's stop losses resting here. There's stop losses resting here. And I told you if we can get high enough, maybe here as well. Now, obviously, we didn't make it all the way up here, and that's totally fine. But it took out stop losses here and here and here. And what does the market do after that? Now, let me go to a 15-minute. Okay, what does the market do after that? After this, the finesse, the run lower. So price took everybody out of the market. That's the purpose. Just like old boy was saying, right? The banks don't want you to win because if you win, you're taking money from the banks. So the banks want to take money from you. And this is how they do it. And this is how you see it in price. And then they run it lower for the profit taking. Okay. So there's still about 80 of you in here. Let me check the chat for just a second. I don't know what you guys are saying.
As someone was asking about where you were going to be tomorrow night, and I told them that it would be right back here on Zoom. I've already created the link, and we'll start sending that out as soon as ForexNChill's over. We'll start spreading his flyer everywhere with the Zoom link for tomorrow night. It's already created.
Oh, yeah. Gotcha. Yeah, it'll be here. So thinking tomorrow. Okay. Now that's an injection. Yeah, it is. It's a long needle. Yeah. I could definitely joke about harsh drugs, but we're not going to do that. So yes, that is how I see the market. Whether that's true or not, that's how I see it. It's pretty much reverse engineering retail trading. Now, again, and I'm not trying to talk too much about myself, okay? But after doing this for 5 years, in the very beginning, yeah, I used to get wrecked. You know what I'm saying? Yeah, I blew a couple of accounts. Now, out in my learning stages, I knew I was in my learning stages, so I only started with $100, $200 at a time. So it wasn't like, they say trade with money you can afford to lose, right? Or don't trade with money you can't afford to lose, right? And I took that to heart. And I'm glad I did it because they were absolutely right. So I was losing, but I was gaining experience and I was gaining all of that knowledge, right? To be able to reverse engineer it, right? So there you go. It's doing everything wrong backwards, right? So if we know that the market is manipulated to take your stop loss, well, guess what? Instead of placing your stop loss here, let me do a visual. I know you guys like visuals, right? Right? Say we're short for whatever reason, it doesn't matter. And we have our stop above this high, like I said, right? Obviously, in this scenario, you would have been stopped out. So now reverse engineer it. Instead of getting in here and placing your stop here, guys, check this out. Instead of placing your stop here, that's where you're going to put your entry. Oh. And then place your stop 20, 30 pips above that. Okay. So now when the market jams higher during news, people are getting out, and guess what? We're getting in. Oh. So now you're aligning yourself with the ones who are controlling the price. It's that simple. It's that effective. And it works. Because if it didn't work, I wouldn't have a bazillion success stories from everyone I've taught in. And a long history of blue trades. Okay? And that's all it is. Reverse engineering the, I don't want to say retail universe, but it's just, I don't know. My verbiage is terrible, but I'm pretty sure you get the point. Okay? I'm pretty sure you understand it. I think you get what I'm getting at. Okay? Let me check the chat one more time because I know you guys are kind of, you're not blowing it up, but you're just kind of, you're in there. Nuggets. Yeah. Okay, so Flo Pips, what is your question? What is your question? And while we wait for you to type your question, yes, I'm on stream with Rock Coomer every Friday, minus maybe one or two because sometimes he brings on other guests. You know, no big deal. But excuse me, generally I'm on every Friday. And then the one we did this morning, well, for me, it was last night. It was the pre-NFP stream. All right. So if you were there watching it, I'm not going to lie, that was a very powerful stream. Okay. Just between myself and with Rock Coomer, and we hit over 200 people live. It was just amazing. And I had such a great time. Okay. Can you do a short repeat where you now or no get in? Okay. So are you just trading news? How can it determine a spike will occur? You've got a Telegram channel. No, I don't have a Telegram channel. The Trade House does. They have a Discord. And I have my own personal Discord. But unfortunately, that is for Trade House members only. But you guys are more than welcome to watch me on IMTV or Go.tv, whatever we switched over to. I don't know.
Do you have your YouTube up yet or anything where they can follow you?
Yeah, I'll put it in the chat. I haven't posted to YouTube in a while. I will soon, and the call that we're going to do tomorrow is going to go on YouTube. I know it's probably going to go on your channel, but I'll post it to mine as well. Everything I do is John Fibonacci. That's Facebook, that's Instagram, that's YouTube.
You, John. Can you hear me?
Uh-oh. Can you hear me?
Okay.
Yeah, I can.
It said okay, that was my internet. Sorry, it said my internet was unstable.
Okay.
It's all good. Everything I do is John Fibonacci. Instagram, Facebook, Twitter. I don't do Twitter, but Facebook, YouTube, Instagram, everything else is John Fibonacci. All right, except for my driver's license. That's about it. So hold on. One of the questions I saw it, but I forgot what it was. Oh, where I get in. So the idea is to get in where retail traders are getting stopped out. So like I said, that's why I put these visuals here. So this first one, let me change the color. Maybe we'll have some distinct difference. This regular one is assuming that, you know, we would place our stop above a high or above another high because that is what retail is taught to do, right? So the market jams up there because there's all those orders that are resting up there. And so you can see that here, and then it runs the other way, right? So if you've been trading for at least 6 months, definitely over a year, if you've been trading for over a year, I know with almost 100% certainty that at least one time in your trading career, at least one time, you have got stopped out, but the market still went the way you thought it was going to go. Where you woke up the next day and you pulled up a chart and you were like, oh man, it fell 40, 50 pips. I must be up. You know, my account must be growing. But all of a sudden you look at your history and you've got a loss and you're like, well, what happened? You got stopped out, but the market still went your direction. Has that happened to you? Yes or no? I'm going to check the chat because now I'm asking you. Has it happened to you, yes or no? Okay. Everybody and their mother and their grandmother is saying yes. I did not expect that type of reaction from you guys. You guys are awesome, because I get more feedback on here than I do on whatever TV that we do. Graham says yes too. Okay. Costa Rica, that's awesome. So yeah, reverse engineer that. So assuming we place a stop here, now instead of getting in and placing our stop, we're going to go and place a sell limit where our stop loss originally would have been. Then when the market does its razzle dazzle, we will enter the trade. Yeah, we might take a little bit of drawdown. Okay, I'm not going to tell you how to get exactly down to the pip. Have I done it before? Yes, I have. But trying to catch the very top or very bottom, you can miss out on a lot of trades. So yeah, I'd rather just get in and take minor drawdown and then be in it for the long haul. So like I said, a lot of you told me yes, that you've been stopped out before, but the market still went your direction. And now I'm telling you why. This is why you got stopped out. Because the people or machines or whoever or whatever is controlling the market is doing that on purpose. So now you just reverse engineer it. Congratulations. Now you're riding the ones who drive the price lower. So everyone else is getting stopped out, but you guys are getting in. Awesome, right? And this happens all the time. You can do all the back testing in the world that you want. You can. And that's exactly why I love this scenario so much. Because just like at the very beginning I showed you, right? Where, and again, I can easily be roasted for doing this, but I'm going to do it anyway, right? If people are looking at this channel, right? I don't even know how to do it anymore. Let's assume like, right? Oh, channel, boom, 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 boom. We expect it to go lower. Nope. It breaks the channel and then goes lower. Now, there's another part to this as well, because it's not just stop losses that are going short. For people who look at the market like this, in a different scenario, right? Say you're looking at the, what is this called? The resistance line, channel resistance. I don't know. Who cares? Whatever it's called, right? If the channel, the quote unquote channel breaks, they want to buy it to the upside, right? Oh, I want to buy the breakout. If you buy the breakout, you're getting wrecked. The market might trigger your buy stop. You might be in 10, 15 pips of profit, but then ultimately you get wrecked. This was a 5-minute candle. I know this is a 15-minute chart, but I showed you the 5-minute first. So yeah, you would have been in profit for a minute, couple of seconds, but then ultimately you get ripped. And if you don't have downside protection, this is blowing your account. And now you know why. I just exposed it to you. In one scenario, I could do this all day. I'm not going to, because I know you guys got things to do, and some of you are going to go to bed after this and all that, but I just had coffee. I'm going to be up for a while. But that's how it's done. Now, there are plenty of other ways to do this. This is just one example of many. But that's actually going to be it. I know that it's been a while. It's now like 11:10 for me Central. So guys, I want to leave you with this. Tomorrow on the same channel, ForexNChill, the real ForexNChill, right? I'll be going over all, if not most, of the products that have helped me as a trader. We're going to go over multiple books. I'm going to go over office supplies and things like that. I promise that will help you out. And just for the sake of I don't know what it's called. When I grew up, right, on Christmas Eve, I would always get one present. right? Christmas Eve, I was allowed to open one gift. Okay. So I'm going to go ahead and do that to you now, because tomorrow I'm going to give you the master list, but today I'll just.
Oh, that was a tradition at my house too. So cool. Go ahead.
Okay. I'm glad I'm not the only one who did that. That's awesome. So I will leave you with this. Here is one of the items I will go over tomorrow. Okay. It is kind of expensive. I'm not going to lie to you. It's very expensive, but this is it. Okay. I'm going to write it down. And it's out of the blue. It's not something you don't know what it is. This is what it is. Okay. It's a whiteboard. The whiteboard, the one that I have is huge. All right. It's about $130. I'll be honest with you. I'll be upfront. So it was $130. I got it off of Amazon. I cannot tell you how proud I am of this whiteboard, just because it has kept me, how do I put this, organized, other than like a calendar or just writing stuff down. A whiteboard it's a place where you can write down ideas. You can write down, jot down quick phone numbers, different trades that you might have. Like, there's just an infinite number of things that you can write down. And having a whiteboard on the wall, I have it on the wall in my room, like straight up, it's on my wall. Okay. I can't show you a picture of it because my phone's charging, but if I could, I would. And it's amazing. All right. And I will go over it again tomorrow, but yes, that's what I'm going to leave you with, a whiteboard. And I love it. All right. So with that being said, that is going to be a wrap from me. So I hope that you have learned something on this stream. And I look forward to seeing all of you again tomorrow when I do the Traders Christmas wish list. And that's probably going to run like an hour or so. But I can promise you it's going to be something very special, and it's going to be different, and it's going to be something that you probably haven't seen before. All right. So with that being said, I'm going to hand the mic over back to Guinevere. All right. And I'm going to stick around in the chat, but I'm about to mute myself. I hope all of you have a great night, and I will see you tomorrow.
Thank you so much, John.
We got people saying they learned a lot. Thank you for jumping on. And like I was telling you guys in the beginning, before John got on and we looked at his video, all of your knowledge isn't going to come from the charts. There's so much more that we need to study and absorb if we're going to take this as a serious career or a serious investment. And so you want to model yourself after people who are successful or who have achieved the things you want to achieve. And that's why we like to bring different guests here on Forex and Chill, so you can get knowledge from different people, because you never know who's going to be the one to give you your aha moment. But I had coerced my family into going out to eat tonight. You hear them coming in. It's about to get a little rowdy. My grandkids are coming in. So I'm going to mute and let Grant take it back over so I can spend some time with my grandchildren. Flew 3,300 miles here to be. Hi, baby. Say hello to everybody. So now you see why I'm going to mute and give it back over to Grant so I can love on my grandbabies a little bit.
All right, everyone. Well, we've had a pretty long night. It's been pretty good. Anybody have any other questions, or would someone like to mark up? Anybody? If that's it, then I'll give it a few more moments. If Kenya, let's see. Krisha says, I need a mentor. Anybody willing to help out? Yeah, I mean, let's see. Gigi's a mentor. We have several other mentors in our group. If you want to find out later, you can hit up Gigi. We didn't mark up the US 30. I think for right now, US 30, we'd want to wait on that. That's not for your beginning investor at all. It works very similar to other pairs in general. You would mark it up the same way. You just have to watch out for the volatility on that one. Kathleen can help also. if you want to hit up Kathleen, or if you want to look for Gigi in, let's see, we're going to drop a link for a group, and give me a moment while I get that link. Also want to thank everybody who was on tonight, Eric, Susie, John. It was such a pleasure watching you all work. Give me just a moment.
Does anyone have any questions while he drops the link to our free Discord?
Question, Gigi, how you doing?
Just fine, thank you.
What and where is the free Discord?
Okay, Grant is getting the link.
It's a great question. Discord is an app, and it works similar to Pip Talk, the way that used to work. But it's a little different than Telegram. Within the group, you're going to have different channels.
Oh, okay. Thank you.
You're welcome. You can load it onto your phone or even your desktop. Both is usually a good idea.
All right, any more questions before we end tonight?
Gigi, hi everybody. Did you do GJ? EJ? Which one is it?
I have Screaming Cran because somebody else can mark it up if they want.
Gigi. I can show what I have.
Okay, you can share your screen. Michael, Grant loads it up on Saturdays. All right, you're able to share your screen, Kathleen. We're just going to be like in Forex and chill mode now. It might get a little loud and rowdy. So this is the chill part. We did the Forex part. So if anybody wants to stay on and mark up, feel free to. But as far as everything else, that's all we're going to do is just hang out and chart up together. Now I'll get the Discord link.
Okay, let me log on to my computer. I had to restart my computer. It had some updates or something. Did anybody take that trade? I didn't, but I marked it up and I didn't see my entry.
Here's the info for tomorrow night. It's going to be at 6 p.m. Eastern Standard. So if you're on the West Coast, that's 3 p.m. If you're overseas, a little bit earlier. A little bit later.
Mm-hmm. All right, so since we're offline, we're just hanging out. Does anybody want me to mark up a chart while she's getting ready to share?
Okay, I'm ready.
Are you ready? Okay. All right. So Grant, you can stop sharing and let her share her screen.